Hi everyone, thanks who is here for joining us. Today and right now we'll be discussing the upcoming CPI flash estimate for the Eurozone year-on-year data. Last month, the inflation rate in the Eurozone reached 0.8%, following 0.9% in November. Economists, though, expecting a higher rate of 0.9%. All in all, Eurozone inflation remained below the ECB's target of near 0.2% for the 11th consecutive month. Core inflation, excluding energy, food, alcohol, and tobacco, weakened to 0.7% from 0.9% in November. According to a survey conducted by Bloomberg, the estimate is 0.9%, and we still know that this is way below the ECB target of 2%. Let's have a look at what are some of the economists are saying about the upcoming data release. There we go. Here we have some of the economists that were polled by Bloomberg, starting from Commerzbank, Credit Recall, Credit Suisse, and a variety of other firms. You can see them right here. Overall, 41 economists were surveyed, the high estimate being 1.1%, while the low estimate is 0.7%. According to Credit Recall, the Eurozone flash estimate for January will be one of the key highlights, and they expect a modest rebound to 0.9% year-on-year, up from 0.8% in November. So overall, they are in consensus with the majority of other experts. Of the stronger core inflation and likely a slightly negative energy-related component. In addition, they also said that regarding Eurozone core inflation, they expect a rebound to 0.9% year-on-year, following the record low print at 0.7% in December, mostly related to base effects, namely regarding German services again. Energy inflation should turn slightly negative year-on-year data, with slightly weaker oil prices and a new set of electricity tariffs in the different countries. So these are some of the fundamentals that we wanted to tell you a little bit about the upcoming data release. And now I would like to welcome Alison from the YoY, who will cover some of the technical aspects and the potential impact on the euro.
Hello, dear guests. So today we are discussing Eurozone inflation data, as well as we are having a release of Eurozone unemployment data as well. And actually, in case we'll see some stronger than expected data, for example, 1% inflation or 12% unemployment rate, then the single currency will receive a strong bullish impetus, and it seems that it will manage to end this week's downside rally and will rebound slightly higher. When having a look at Euro USD 4-hour chart during the last 2 weeks, actually, we are seeing that a week ago the pair was strongly bullish, and during 1 week it managed to appreciate more than 200 pips and even soared above 137 level, which is considered to be a key level for long traders in the short term. However, this week the pair almost erased all earlier gains, and currently it's fluctuating around 135.38. That will be, to be more precise, price close to 4-hour pivot and a 200-minute simple moving average. And actually, as you can see from the 1-minute chart, during the last 2 hours the pair was rather stable, once again fluctuating around 200-minute simple moving average. So, as we assume that data can surprise markets to the upside, then the positive surprise trading strategy will be with the entrance point at the market price. Once again, that's 135.39 or 40. The potential take profit could be placed at 135.67, just 27 pips above the market price, and it's represented by 4-hour resistance, as well as we see that earlier the pair was struggling to reach higher or lower than this level, so most likely the pair will experience some difficulties before moving any higher. Therefore, the potential take profit can be placed right at this level. As to the stop loss, it's recommended to place around 135.13, And to be more precise, that's a recent low as well as daily support and 4-hour support. And in pips, that will be 26 pips from the market price. And the reason behind placing stop loss slightly, the distance until the stop loss is slightly more than until the take profit, is first of all the fact that we've been experiencing as aggressive sell-off yesterday, and just during the last 2 days the pair actually depreciated more than 130 pips. However, also in case some traders believe the data will surprise markets to the downside, we can easily switch take profit and stop loss, and short traders can aim daily support once again 135.14. So as always, let's have a look at market sentiment, and as we see that currently only 60% of traders are holding short positions on the pair. Meanwhile, the single currency is sold in almost 55% of all cases across the board, while attitudes towards the greenback is slightly bullish, with the currency being bought in 58% of the time. Speaking about the pending orders, we see that almost equal number of long and short orders is placed in the 50 pips range, while in the 100 pips range, 44% of orders are placed to buy the pair. So that majority of them is ready to provide some support for a bearish movement. And when having a look at market sentiment provided by other market participants, we also see that it's quite universal, as traders from free brokers are selling the pair more often than buying it. However, I would like to pay attention that since yesterday the market sentiment slightly has changed towards bullish side, and if I recall correctly, yesterday Dukascopy market sentiment was around 61%, while the Saxo Bank and daily FX was around 68 or 70% bearish. So traders are not sure anymore that the pair will continue moving to the downside. When speaking about technical indicators, we see that they are not actually universal, as indicators on the hourly, daily, and weekly chart are quite neutral, while indicators on the monthly and 10-minute chart are sending buy signal, and at the same time indicators on the 30-minute and 4-hour chart are suggesting the pair will depreciate. However, I would like to stress out that MACD indicator suggests that the market is oversold already and will see a bounce back soon, as it sends buy signal on most of the time frames. So just 1 minute left before the news release. I will open 1 minute chart, and okay, we see that the data come out already, and we see that Eurozone inflation came slightly worse than expected, with just 0.7%. So the pair is likely to head towards daily support at 135.14, which is actually a stop loss. And once again, if we consider the data is worse than expected, then the pair can easily reach this level. However, we see that unemployment rate fell, and it's just 12% currently. So we are having quite mixed data today, and therefore market reaction cannot be so impressive actually. Nevertheless, the initial market reaction is just 13 pips, not very impressive. And also taking into account that data is mixed, I guess it would be rather optimistic that the pair will be able to reach 4-hour support of 135.22. And still the pair is trading around 135.29, so let's have a look at 2 more candles or so. You can also see that core CPI improved in December, I guess, and it came 0.8%, accelerating from last month's 0.7%. So once again, the data is quite mixed today, and it seems that market also struggles for movement, and the pair is still fluctuating around 4-hour support of 135.30. Yeah, and I guess that will be all from my side. Hope that was useful for some of you. And in case of any questions, so feel free to ask them in the chat section. But for now, I'm giving the floor back to Gita.
Thank you, Alex. Thank you for your technical analysis. That seems to be the end of today's economic data release, but be sure to tune in 2 hours for our Dukascopy research webinar. Until then, see ya. Bye-bye.